Right. GM. How's everyone doing today?
Good.
GM.
Good
Perfect.
morning.
Good. Good. Great to see a bunch of friendly faces here and have these folks on today. Really excited to get into it. And thanks everyone for stopping by and lending us some of the part of your time. But really excited for this space that we have here. We've got some amazing guests in front of us, and there's a ton to learn. The RWA market is going absolutely nuclear right now, and things have been going crazy. There's a lot happening right now, and the stories are not always told very well. And there's always great projects that aren't really covered properly, or the press doesn't know about them, or just people just don't understand. And so just spending more time hearing from the people building a bunch of this amazing stuff and funding a bunch of this amazing stuff is always, I think, great for everybody involved. And so really excited to get into today. So maybe before we get started, let's do a quick round of introductions. Would love to hear from some of our guests here and just some of the background as well. So either Bradley or James, feel free to pop in, but whoever wants to get going.
Sure. I can go first. Great to meet everyone. Bradley, all good. I've been in free zones and tokenization for about a decade now. So I built the first and only free zone in the US as a public-private partnership with a tribal nation and put in a whole bunch of Web3 laws and banking laws and commercial codes. So you could effectively build crypto projects there in a safe regulatory environment. Did the same thing at Abu Dhabi Global Markets and free zones around the world. And over that time, as I've been supporting these special economic zones or free zones, I've also been doing a lot of tokenizing. So I've tokenized pretty much everything from the future production of sports teams all the way to gold in the ground. And I did the very first bank issued stablecoin. I've done early sovereign identities and people registries and property registries, largely for enterprise and government. And about a year and a half ago, 2 years ago, founded Messier as an intent to bring RWA tokens regulated as crypto, not securities. So they're freely accessible and sovereignly owned, right? So like each person has the autonomy to own their RWAs and primarily focused on high yield, high quality. So things that earn more than 15, 25% base earn on RWAs is what excites me. So that's from the underlining product, the collateral that's backing the RWAs, and so that's kind of what I've set forth to build and launch. And super bullish on the Plume ecosystem. They're going to be our launch chain, so we're really digging in and super excited to build.
Amazing. That's awesome. And welcome, Bradley. He's a great friend of Plume, and we're like incredibly excited to talk about this here. So a lot to do there. And maybe James on our Arcanum, if you want to do a quick intro as well.
Sure. Thanks, Chris, and thanks for having me. It's great to be on. So my name's James McDowell. I'm founding partner of Arcanum Capital. We are an asset manager within the crypto, DeFi, Web3, digital asset space. I've personally been in crypto since end of 2016, early 2017. And Arcanum Capital has been around since the year 2020, when we raised our first fund. Um, I've known Bradley since 2021. We actually invested in him from our first fund. So super excited about what he's building. As for Arcanum, where that first fund was fully deployed by the end of maybe mid 2022. So lots of great companies in there enduring. And we're now raising our second fund. And we've just managed to close one of the biggest investors imaginable. Um, we actually managed to close Tether as an investor into our second fund, as well as the Draper Foundation, as in Tim Draper, the Silicon Valley sort of VC veteran. So that's really exciting news. And yeah, we're excited. 2025 is looking amazing for this space. RWAs is a huge narrative. So yeah, let's get it.
Amazing, and congrats on the second fund and landing those LPs. I mean, that's, we'll get into that, but it's honestly insane. And there's a lot to talk about with stablecoins and RWAs and their role in growing things as well. So obviously some incredible backers there and some great alignment between everything. So that's awesome. And then maybe right off the back of that, maybe James will go straight to you to start, and then Bradley as well. But would love to just hear, like, there's so much going on in RWAs right now, right? You've got of course, all the stuff with BlackRock, but you've got all this stuff internationally as well, different banks doing CBDCs. You've got all the sort of attention in the US now, especially with the more crypto friendly administration, right? And a lot of bottoms up innovation as well, with individuals now building and doing stuff here and tokenizing anything and everything. And so we're seeing a bunch just happen in general. Where do you guys spend your time today, James? As an investor, where are you looking? What do you think is growing? What's driving it? How do you think about where things are and where they're going?
Yeah, so as an asset management firm, we are fully focused on venture capital. So the RWAs themselves to us are not that interesting. RWAs, real world assets, refer to tangible or physical assets that exist in the real world that can be tokenized or brought onto blockchain platforms for use in DeFi, for example, and other applications. Examples of these are real estate, like properties or land, commodities, gold, oil, etc., financial instruments like bonds, intellectual property, and even art and collectibles. And so, being a venture capital asset manager, none of these really fit into our mandate, right? But what we see is the financial system, like you say, that it's really evolving. You've even got BlackRock now saying tokenize everything. And so we're kind of looking at the picks and the shovels, right? We don't invest directly in the RWAs, but we invest in incredible entrepreneurs like Bradley. And you guys, I can't believe we missed your Series A. But the infrastructure, the layer ones and the layer twos and things like that, that are actually, providing the piping and the digital infrastructure for all of this to unfold on. I think there's a lot of resistance. You've got financial intermediaries in traditional finance that are ultimately being displaced. And so there is a seismic shift happening where, middlemen like transfer agents and brokers are probably shitting themselves a little bit, because now you can tokenize these real world assets and you can put them on decentralized exchanges, and you could even hold the RWAs and put them in liquidity pools and get the trade fees yourselves, right? So the entire system is being disrupted, like I say, by incredible entrepreneurs and like Bradley and his team and you guys. And so that's where we're interested in the startups and the infrastructure.
Perfect. That makes sense. And just like you said, like everything, right? When there's a new market, right, you really, a lot of the infra and the tooling becomes a big part of it. And you need that in order to actually get to the applications and build these other things on top. And maybe transitioning over, at least said, like, investing in great folks, and Bradley's, always very humble about it, but like he's one of the first people to really get into all this years ago and drove a tremendous amount of like sort of all the things we take for granted today. So maybe transition to Bradley, like, talk to us a bit about, Messier. Obviously, I'm imagining you're excited about that, but like, give us a
Yeah.
little bit of a little juice there. Talk about what's going on and what's happening and what else you might be looking into.
Yeah. I mean, I actually strongly agree, and I think the interesting thing about Web3 building is there isn't set ways to do things. Everything is very often programmable, and interfaces are much more integrated to the technology, right? Like every time you touch a layer one, you're interfacing with your wallet on your phone or hardware or whatever that allows you to take a broad set of actions. And I really think it goes beyond the tech level, right? When you're talking about RWAs, because you have to find a means of reaching the underlying collateral to be able to get this off-chain earn, right? Meaning that when you guys are holding USDT, of course you can deploy it into DeFi and earn 5, 10, 25, 35% wherever you find it, right? But you're not earning on the reserves of Tether. That's why Tether is literally one of the most profitable companies in the world. I think they did like 10 billion between now and 2022, right? Like more profitable than BlackRock. But you actually, because you're tapping back in the real world and you want to bring that earn to the users, to the holders of RWAs, you have to really dial in the legal and regulatory part that fit in and ultimately bring the technology forward. And I think builders that have the wherewithal and the experience and the depth and going into making sure those are really lined up, like regulatory being where are you domiciled, where are you issuing, where are you custodying those RWAs, legal obviously being the type of legal structures that you're using that denote these RWAs as, well, they could be securities traded as ownership of a company. They could be like ours, which is, non-securities and more traded like individual debt notes between the protocol and the people that are issuing them. So yeah, I'm super bullish on builders that dial that in, and I think we definitely have something that we've got in and are really excited about, because that's where we started. Is we wanted to give the most crypto experience to holding RWAs and earning RWAs, crypto native experience, Web3 native, so you can deploy into DeFi. They're regulated as securities. Often you have to have them be traded on securities exchanges. This is difficult for DeFi protocols and other builders because they don't want to be listed as a securities exchange. It's way more onerous, and it brings it back to the point of transfer agents and all these intermediaries that we don't need. And so, yeah, our first RWA, we're really heavily focused on compliance carbon. So we picked California carbon allowances, which are owned and issued by the state of California. It's about $100 billion secondary market on futures exchanges, with a really, really exciting kind of growth in terms of earning potential. Probably 25 to 35% base earn on a yearly basis is kind of what we're looking at now, and that's across the line for all the RWAs that we build.
Insane. And I think let's get into that a little bit, because I think when most people hear about RWAs, they think two things. One, it's going to be some permissioned thing. You can't use it, unless you're on some regulated decks. I got a KYC and give up my fucking passport or anything, right? Or number two, after you do all that nonsense, you're stuck bag holding this thing, and it's going to spit off like a 5% yield at best. Now what you're saying is much more is the same way as how we see it, which is like, at the end of the day, you shouldn't have to know about if it's an RWA or whatever. Like, what you care about is a good asset, right? Is it solid? Is it stable? Is it permissionless, right? Does it fit in with crypto ideals and crypto UX? And third, making sure it's actually an interesting asset from a yield perspective. And I think some people might know about carbon credits and all of that, but how do you do all this? And how do you make this work? How does your approach specifically make this possible? Because that actually sounds like something that people would use.
Yeah. I mean, so we always partner with subject matter experts in each and every asset category we go to. So for this, we partnered with one of the largest investment banks based out of New York that invests in this, that has set up the most amount of liquidity on New York Stock Exchanges, that works with the massive market makers, like that you see, like Citadel and all these other guys that make Jane Street, that make these markets on traditional markets. And we partnered with them, and we actually got the ability to get physical custody of these carbon credits. And I guess it's important to, because we're talking about a specific asset class, to talk about, well, not all carbon credits are created the same, right? Like, you hear this term carbon credits a lot, but people don't know that there's two markets. There's a voluntary market, which means I could have a mangrove or a forest in my backyard, and technically I'm offsetting carbon, so buy my carbon, right? Obviously, that's had problems with fraud and the liquidity on those markets. You're talking 2 to 3 billion. And then you have compliance carbon, which is issued by like a sovereign nation like California or EU. And those are almost $1 trillion in total market value, and have really liquid secondaries. So we were able to kind of go and sit down with these guys and figure out and understand these assets and understand how they're expected to grow over the next period of time. And it checked all the boxes. The quality of an asset issued by a sovereign nation is like the highest you get, right? When you think of for instance, it's like, you could get a passport issued by the EU, and everyone's going to respect it, right? Because it came from like the highest authority across that jurisdiction. So being able to get these assets that are actually monitored and supported by that, treasury bills is another one that people dove into, but treasury bills are boring, right? 5%. These things we're looking at 25 to 38% base earn over a year is awesome, right? Deploy that into DeFi and really kind of degen out and get like 60, 70% APY on a fast growing network like Plume is just insanely exciting. So that's obviously what I think is going to drive investment in crypto is yield and liquidity, and that's what we're primarily focused on, these high yield assets, higher earn
Insane.
assets.
And I think, I mean, it's just going to be absolutely nutty to see that. And like, we already see people holding a lot of 5%, yielding treasuries because there's nothing else, right, that you can really do to hold something that's tangible, something that feels right, something that gives you a real yield, right? And also is a really a tool to onboard new people in, right? That does the T-bill doesn't solve that today, right? Right. Whereas what you're talking about, which is a new way to one, get exposure to this, but also two, earn really good yields and then begin to do other stuff with it, like and have a liquid secondary market. I mean, these things are just like, again, it just seems it sounds, feels, and smells like crypto, right? Except the difference is it's a real thing spinning off real cash, and you're able to hold that on chain and make use of it and continue to degen stuff if you want to, right? Which I think is our view as well, and I think that's why we're excited about what you guys are working on. Maybe shifting gears, for James here, when you're thinking about that, right? I mean, like, you look at something like Messier, I think the mechanics all sound great, right? Great asset, great founder, great project. How do you look at things though? That's how, I was an investor for a short time before. So I am indexed heavily on founder, but how do you think about, you know, high quality and high potential RWA projects, especially if you're doing a lot of stuff in crypto? Sometimes it's hard to tell in the beginning. And so what do you use to identify the right types of people? How do you evaluate them? What are you looking for?
Yeah, good question. So yeah, if we use Brad and Messier as an example, they need a really strong, reliable, robust partner, right? And that involves a hell of a lot of strengths. You have to have a lot of components in place. One of the biggest ones that springs to mind is liquidity. Um, you're going to have a lot of liquidity available, and you're going to have extremely reliable technology. One of the risks with RWAs and all these sort of protocols is the protocol themselves, right? If that goes down, if you have downtime, if you get hacked, if you're not fully audited, that can be a complete mess. Um, Another example of something that is essential is building a community, right? And shouting from the rooftops about your platform, and making sure that people take notice and come aboard and see what's being offered. Um, so yeah, lots and lots of components. Um, and in RWAs, you definitely see a lot of the former TradFi guys as well. So if it's to do with RWA and these real world assets, I usually look for someone who's been at one of the big companies or one of the big banks. Um, like Bradley, for example, has a lot of experience in the sort of traditional finance world, and that really does speak volumes because they are two different worlds. And a lot of these sort of crypto degens don't really have the experience in the TradFi world. When you start dealing with regulators and putting white label accreditation into smart contracts, this is a big deal, and so you can't it can't be taken lightly, and so that TradFi background can really help as well.
Yeah, totally. I think that makes sense because look, the thing about RWAs at the end of the day is you're still dealing with the real world, right? And you still have to
Yeah,
interact with it in some fashion, some sense. I think a lot of the work that folks like Bradley do and that we work with great folks on as well is to find people that understand crypto and find people that understand the real world at the same time and can both
yeah,
interact with the real world, but then also understand crypto to bring that on chain as well in the
yeah.
right way,
And it, and
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 have
that is
both.
that is it's rarer than you think, right? Because you've got like the boomers who will never come into crypto because they're either like philosophically dead against it or they just don't get it and don't want to get it. And then you've got the younger crypto native guys who have no idea about TradFi and like the real world and like banking and stuff like that. So actually finding that balance and the people who can bridge the gap between both is really valuable and really rare.
100%. I think that is the key. Like when you only one or the other, you can have a great DeFi product, but just no tie to the
Hmm.
real world, or you sort of underappreciate interacting with the real world. And they don't take you seriously. You can't get it done. And then if you're too trad, you don't understand that at the end of the day, the audience on chain is crypto people. You're not going to
Mm.
just do some nonsense that's just tradfi, right? And expect crypto people to get into it, right? They're going to want to do things their way. That you need to be able to understand it and build the product and the use case and the experience in a way that's sort of familiar to those people. And again, like I think that's exactly what you see with projects like Messier, which is like when you hear things like, okay, it's permissionless, right? It's got tons of liquidity, and it's yielding 25-30%, right? And that type of stuff you just don't see. And versus like, hey, you're going to bring this product on, it's got a 15-20 year lock, there's no liquidity, all this kind of stuff, right? There's just a different feel, a different story here. And I think that product is much more fit. Now, it doesn't mean one's bad or one's good, but it just means we need folks that understand how to sort of thread the needle to really grow this together. But yeah, I mean, look, obviously, look, we've got 5 minutes left here, so I just want to do a quick time check. But one is just wanted to thank our guests for joining today. I mean, I think I couldn't be more excited for what Bradley and the Messier team are working on. We're going to do a lot of stuff with them as well, and really, really drive a tremendous amount of volume and growth and all these things here. They're going to be one of our core launch partners for sure. And obviously, we look for the same thing: just great projects, great founders, great insights, and great execution. And we saw that with Messier, and of course, Arcanum. We have tons of projects that are working with us. You would love to introduce you to a bunch of them, and even just to get your have you meet them for advice or feedback, fundraising, whatever it might be. But I'm sure you have tons of insights just from having invested in the space and looking around, especially your LP. So you have got insights that I'm sure would be helpful for the community as well. Um,
Mm.
but
Yeah, absolutely. Yeah.
totally. And maybe like last question, like how do you where maybe last question actually, maybe to flip it a little bit. Let's get a hot take on this. Like, what do you guys think is like, what's your hot take on RWAs today? What's bad? What do you not like? What do you think's overvalued, overdone? What do you not like? Let's get something else in
Governance tokens. I think governance tokens associated to RWA projects. I don't think they found a very good use case for them. I think a lot of these like highly volatile, less liquid secondary tokens are very, very difficult. I think they're great for DeFi protocols, but I don't think the RWA is quite ready for them. I can see them being like insurance pools and stuff down the line once RWA crosses $1 trillion liquidity in the next year or so. But at least initially, I don't see a huge value in them. And then secondarily is multi-collateral backed RWAs. I think creating a hodgepodge of different collateral and stuff and arbitrage and over centralization collateral is hugely problematic. Like, what happens if the market plummets to Athena, right? Like,
here? Right.
and then I would say my hot take, I think, I think there's a couple RWA projects, Maker, now Sky being one of them, that are a leaning tower of Pisa and has a whole bunch of transparency issues. So like, I think, yes, we're going to see more liquidity. Yes, we're going to see bigger projects, but also I think because we move so fast, we're also going to see a couple zeros in the next cycle.
Love it. Good. Came off me right away for that. I love it. Good. James, what are you thinking? What do you think?
Well, something that springs to mind for me and for us at Arcanum Capital um, is tokenizing investment funds, right? So our second fund is actually a tokenized vehicle. And that's not just a token that represents like your economics in the fund. Like I mentioned earlier with the smart contracts and everything, if you're an accredited investor, all of your sort of credentials are baked into the smart contracts. And so when you go onto the secondary market, you'll be able to see all of the sort of investment opportunities available to you. And if you're an accredited investor in the right jurisdiction, our fund, you will be able to buy into and sell out of even after the sort of final close and before the duration of the fund. And that's really revolutionary because venture capital funds are typically very illiquid, right? Like the capital comes into our fund, we deploy it into startups, if an investor comes to us after 6 months and says, oh, I want to redeem my capital, well, good luck with that, because it's completely illiquid.
Yep.
But now, because of, I mean, we do like quarterly valuation updates, and if a company in the portfolio raises another round at a higher valuation, we mark that up, and so the value of the fund can increase, and so there can actually be a significant markup in the valuation of your position in the fund, but there's no way to sell it. But with a tokenized fund, you could actually list your position in the fund, with a, I don't know, 10 or 20% markup, but that may be 10% below the actual sort of value, and be able to sell with instant settlement, right?
Yep.
And the other thing that is unlocked here, which is really cool, is imagine being invested in a venture capital fund, and you can borrow against that position. So you don't have to sell out to get liquidity. Maybe you need liquidity for something. You can actually borrow against that position because it has a value.
Yep.
And we just see a world where big pension funds can rebalance their alternative asset portfolios very quickly and seamlessly. And like I say, it's a complete evolution of the system.
Totally. That makes sense. Cool. Well, look, we're right at time here. So before we get out of here, Bradley and James, maybe start with Bradley. Like, where can people find you? Anything to share with the community? Any alpha to leak to the good folks that we have here? What any parting words, and what do you want to say?
Yeah. I mean, I'm always on Twitter, so you guys can just follow me on Twitter, and I'll keep you guys updated of like what's happening. But some alpha, I would say, is I'm feeling we're really looking to bring a couple $100 million onto Plume in 2025. CCAs and our other assets, which is going to be Islamic finance contracts based out of the UAE. So I'm super stoked. I think they're going to be really, really fire assets, and we're going to start. We're going to make earning and yield a whole different level in crypto again, right? Like, and I think it's the next step for us to really see full adoption of RWAs.
Insane. Yep. James, what about you? Where can they
Uh,
find you? Where are you at? How do people reach you?
Sure. So yeah, you can follow us on X at Arcanum Capital. Our website is arcanum.capital. If there's any sort of potential investors, you have any inquiries, that's where you can find us. As for alpha, I wanted to try and keep it real world asset themed. There is a lot out there. Obviously, keep an eye on Brad and Messier. That's going to be a really good one. Keep an eye on you guys. I can't really think of any alpha. There's a few sort of layer ones that I think will do very well once all these trillions of dollars of real world assets sort of come on chain. So I guess just keep an eye on that. It's definitely a big theme. It shouldn't be ignored.
Perfect. Cool. Well,
Yeah,
again,
I
everybody.
like the term trillions. I think we should just keep saying that. Trillions
Exactly.
of
Oh yeah,
RWAs.
trillions and
Yeah.
trillions and trillions.
Let's forget about billions. That doesn't even count. Like, let's do
Exactly.
trillions.
Exactly. That's the thing about RWAs. RWAs, like I think people always forget like the sort of magnitude of the market here, right? RWAs is
Yeah.
one of the only markets, right, in crypto that starts like every single subsector of RWAs starts with a T and not a B,
Yep.
and let alone the sort of the totality of the entire market here, right? So it's just hard to really understand, and conceptualize how much this is going to really impact things and grow everything and build a better system. So we're excited about it all, and for everybody here, thanks for taking the time, Bradley and James. Thanks for stopping by today. We really appreciate it, and looking forward to having you guys on again. And when we get this out, I can't wait to cook up some amazing stuff with Messier. It's going to be insane. So couldn't be more excited to bring this to the community and have everybody see it.
Awesome. Thanks
All
for
right,
having
guys.
us. See you, man.
Thanks, Chris.
Perfect. Thanks, guys. See you.